Well, anyway, it's what it is. I have uh, yes, sir. No, I didn't hear the music. No, I missed it. Why did I not hear the music? You didn't share your screen with me. You see, you do it too. Yeah, I can see it and hear it now. Yeah, money.
Cool.
Yeah, good stuff.
How are you?
I'm good. How are you?
Good. Still
Yeah.
sleepy.
Yeah, right. All right. Well, welcome everybody to what number is this?
Good
I don't know.
question. I don't know.
Number 20, 21? I don't know. All right, but nice day in Vancouver, BC, Canada. Nice sunshine, beautiful. We should enjoy it before the rain comes because the rain's coming apparently.
Yeah.
So, yeah, it is. Anyway, so how was your week? A couple of weeks. We haven't been on for a couple of weeks.
Mm-hmm.
Well, we weren't on last weekend, holiday weekend, right? So, um, yeah. So, how was your week?
It was okay. I don't know. I don't. It happened very quick. Yeah. I don't know.
Yeah.
I don't know much about what happened, to be honest.
Okay.
How about you?
So, any trading or
No, actually, no. No. I think.
no?
Yeah, I've been failing there.
Uh,
Haven't been
okay.
consistent
So Isaac's in a funk.
in the funk.
Yeah. You kind of like, we get these like periods where we're kind of like, oh shit, uh, I'm wrong. I lost money. I don't know what the fuck's going on. I can't figure it out. It doesn't make sense. And you get into this cloud of funk, right?
Mm-hmm.
Because we're trying to, and the challenge is that as humans, and this is normal. It's normal. Right? I got into many funks,
Mm-hmm.
so you kind of get frustrated because you think you know what's happening,
Mm-hmm.
and then something goes completely opposite, and you're like, why did that happen? And you're trying to figure it out. You're trying to figure out what is it? What is the one thing I need to do? What is the thing I need to know? So tell me this. And there isn't one thing you need to know. This is just how the market works. It's just how it is. And you have to trade what you see, not what you feel. Trade what you see, right? You can have a bias, and you just low risk, and just keep going and keep battling.
Mm-hmm.
if you're not in the game, you can't win, and there again, you can't lose. But if you're not in the game, now you could be in the game in many factors. You don't have to be actually trading. You could be demo trading. You could be watching, monitoring the market. You could there's a lot of things you can't do. But what tends to happen is when we get into these little funks, we just completely, and there's nothing wrong with this, by the way, because sometimes you need that clearing of the head, clearing of the mind. Like a spring cleaning in your head,
Mm-hmm.
right? Just kind of shake it out, just kind of, take a rest and, come back later. But I always say this: if you can keep abreast of the fundamentals, not the news, the foundation of how the market moves, you'll be fine. You'll be fine. And you need to get back on the horse and just kind of do the things that you need to do. Now, in saying that, I've been very limited to what I've been trading.
Mm-hmm.
Um, US JPY, Great British USD, Great British JPY, and drum roll, gold. And been doing very well on gold, extremely well. And if we remember, can I show the chart, or we
Yeah,
want to
yeah.
do that? Yeah,
Yeah,
yeah. Okay,
that
so
reminds me. That reminds me. I think I asked you many times, but maybe I have to ask you again. Why you don't trade? I know you why you don't trade stocks, but why you don't trade the S&P?
well, what is the S&P?
Is the all the 500 stocks, powerful companies.
Yeah, so if I don't trade stocks, why would I trade the S&P? I don't know. I don't know. Sometimes, when you get an old wily guy, they're just set in their ways, right?
Ah, I
And they're
see.
just kind of like
So
doing what
you're
they want
just
to
stubborn.
do. Well, I wouldn't say stubborn. Well, my wife would probably say stubborn, but
Uh-huh.
yeah, my mother would definitely say stubborn.
Oh,
That's for
okay.
sure. So this is our weekly chart here, and
Are
you
you
can
sharing?
kind of. Oh shit! There we go. Yeah, forgot that, didn't I?
Yep, no
Got
worries.
that magical share my screen thing. All right, so here we go. Here we go. All right, you can see it.
Yes.
All right. So I'm going to go to the 4 hour because this is where I had my trades going and what I was going to do. And if you guys remember, I've been completely bearish on
Mm,
gold to an extent, right?
yes.
And I'm going to put the Fibonacci on here. And this was very simply, I was targeting this level right here, the extension, right? And as you can see, it didn't hit, but the ultimate reason I was trading this down was just make sure I don't have a 382. Here we go.
So what are we looking here?
So we see this swing from this A to B, right?
Uh-huh.
Right. So a number of days ago, a number of weeks ago, I was trading this to this 382, but I was also expecting this to have four candles. So I got my one, I got my two, I got my three, and this was supposed to be my fourth low,
Mm-hmm.
right? You got 3 here. I mean, this is okay. 1, 2. I got 3. Yeah, I'm okay. So this would have been good, but this played out here because on a lower time frame, there's 4 candles, right? So I was essentially saying, well, I got a 382 here. I hit a 382, and it went back up, but it didn't go any further. So I was trading down to this D extension. You'll see it better on a 4-hour. See, it's the same D extension, right?
Yeah.
So Fibonacci, high to low, had a small retracement, came down, right, and then went back up again. So then it started this beautiful down move here, which is where I was trading, and I was hoping to go here. But here's what happened. At some point, I believe it was around here, I was looking that if this,
Trend line breaks.
yeah, I believe it was there, can't remember, but this is where I was. And I had gone to here, and this trend line broke here. So sorry, gotta get rid of that. So we have this inside one here, right? Now, typically when this breaks, right, it's going to go to a new trend line. So this wasn't formed, remember? So when this broke, this was not here. All this wasn't here. So I'm just going to do this just so you guys can understand. You see what I mean? So this broke here, right, and closed. And then it went higher. So you need to understand that at this point, it's like, well, this market's going up a little bit further. Where's it going? We don't know. There is a potential pattern here, a harmonic pattern that I could see forming. So basically, head and shoulders, right? So here's the shoulder, here's the head, right? Going close, and then this was coming here. So here I was in this trade to the downside. Now I'm out and I'm waiting. And I'm waiting for this to either break down and come here and hit here, but it didn't. And it went back up again. And I went, okay, so now I'm buying. So I switched my bias to selling, to buying, because I got this pattern here. Can we see it?
Yeah.
Let me draw it for you so you guys can see what I'm talking about. We're doing it in blue. So we got this shoulder leveled here, and we got where's that? I don't think we have that. Oh, here it is. Yeah. So here's the right shoulder. Here is the head. And here is the, left shoulder, head, and right shoulder.
So it's like an inverse head and shoulders?
Yeah. Actually, you got that 100% right. Inverse head and shoulders, right? Which is a bullish pattern, right? So here was my trade, right? You see this, a lot of resistance here, right? So right on that high right there. So just want to make sure I got this right here. Yeah, I believe on these highs here. So I basically put a buy right on that high. That's it. My stop loss was down here, and I just let it go. And now this one here, watch this. So I also had this. Yeah, see it? See the Fibonacci swing from the low to the high, back down, trade it up, right? So this was my target, right? Now what I had here was a trend line, but I had one here too. I had a middle one, so I'm going to do it smaller so you guys can see it. And So I was, using this trend line as a guide to say, well, it's hit this, but if it keeps going, I'm okay. So it broke. So I'm like, okay, I'm getting out. I got out around here, and I did exactly the same thing the opposite way. Now, if it broke this trend line, I would
Mm-hmm.
be going down selling it to this D extension,
Mm-hmm.
right? But it didn't break the trend line. Look, and you can see it's kind of struggling, right? So I went, okay, so we're going to draw a trend line here and off of this high right here, right? And I'm saying, okay, I'm going to trade right there. That's what I'm going to do. And my stop loss is below here, right here. X marks the spot, right? Boom. Now, no retracement.
Mm-hmm.
So really, really powerful. I expected a retracement would have been trapped by the backside of this trend line. So I said, I'm not waiting. I'm going to go. And look where I am right now. Boom. And where am I going? I'm targeting this level right here. Now, why am I targeting that level right there? What do you think? Can you
Uh,
tell me?
mm, I don't know, because it's closer to that resistance than the other support, I think, no?
No, it's a 127, and 127 is a very strong resistance and support level. But with this swing from this A to B,
Mm-hmm.
we like to have the 382 hit, right? It has a strong 80% chance of hitting the 382 before it goes to the D extension, which is here, if this swing is going to work out, right? Now, you see how it didn't hit the 382?
Mm-hmm.
And it came back up again. So it has a high probability to hit this 127, and then a very, very high probability if it comes back and closes below the 127 to come back down to the 382 before it goes on and completes its swing. So one of my very go-to strategies for trading is trading a 382. And you could trade it from the B, which is the B here, to this 382, or if it breaks this trend line like it did here, because I wasn't trading this. I was going to. I don't think I traded it. I can't remember. No, I don't know if I did. But I like to trade 382s, but I like it to go up here. Why do I like it to go up here? Well, I can make more money from here down to here than I can from here to here.
Mm-hmm.
Make sense?
Yeah.
Right? And also, what about if it doesn't come back? Well, I'm going up. So if I have this trend line here, see this trend line here? As
Mm-hmm.
long as I'm above that trend line, right? So if I hit this blue line here, if I hit this 127, let me get this out of the way. And, it could go to right to here without hitting the 382, right? It
Mm-hmm.
could keep going. So I want to make sure. Well, I want to benefit from that. So I'm just going to keep going and keep going. And if it comes up and hits this here, well, I'm happy. Now I get out of the trade.
Uh,
But
mm-hmm.
if it comes and breaks this trend line and closes below it, I will get out and then look for a sell down to this 382.
Ashley, I have a question.
Fire away.
Why is it always, or like we always find in this sequences that after those swings, the extension is hit? Like, why? How is the extension calculated? Why does it go there? Why are we looking to the extension?
Well, okay. There's two theories to this. My first theory is because there's a lot of traders that use Fibonacci levels.
Mm-hmm.
Fibonacci levels are mathematical,
Mm-hmm.
right? And a lot of traders use them, and a lot of institutional traders. So it's a bit like this. If I said to you, okay, so this this trend line right here, this black trend line, the market will come back and hit that trend line. You have to buy, and then somebody else knows, and then somebody else knows, and then somebody else knows, and all these people know. Well, then it becomes, well, we're just going to do it because everybody else does it.
Mm.
Make sense? This is how retail trading happens. But this sequence here of the Fibonacci, right, happens in the not what am I trying to say? In the big boys, banks will trade to a 382 level. If you go to webinars, if you go to tradings by brokers that have people talking, and you go to these, big places, they always talk about 200 uh, moving average, the 50 moving average, the
Yeah.
20 moving average, the 382, the 618, the 50, the 127. They talk about these Fibonacci levels
Mm-hmm.
because these Fibonacci levels are really, really good. Now, I want everybody to, I want to do a little quick lesson on this,
Yeah.
if I may. All
Go
right.
ahead.
So this is the Fibonacci sequence, and the sequence fits the trading the swing scenario. Most of you know I like to trade a swing, and that swing comes from a low to a high, right? And then comes down, retraces to a higher low, and then extends to a higher high. Yes? Makes
Mm-hmm.
sense? Now I'm going to keep continuing, okay? So then we have a low to a high, retraces, usually to this part, right? And then extends, okay? So what do we have here? What do we have? We have a trend, because a trend is an uptrend is higher highs
Mm-hmm. Higher lows.
and higher lows. And this is what we got. So this is within the mindset of traders that this is what I'm looking for. So I'm trading these sequences, and I also use Fibonacci to help me define where these retracements are going to, right?
Mm-hmm.
So that's why I use Fibonacci. So I wanted to get that out of the way first. Make sense?
Yes.
Okay, good. So we're going to get rid of this. So simply put, where is this going to go to? We don't know where this could go. We could say, well, it could go to a higher high, it could go to a resistance level. Where can it go? This is why we use the Fibonacci. Because this retracement, let's say it goes deeper. If this retracement goes deeper, and imagine bouncing a ball, right? If you throw a ball and it bounces, it's a shallow bounce, it's going to go up higher. But if it goes long, it's not going to go up as high. Does that make sense?
I didn't understand.
Okay, so let's imagine you're dropping a ball here, right?
Mm-hmm.
And you drop a ball, and there is a table right here.
Mm-hmm.
And you drop the ball at a table, that's, it's going to go up,
Mm-hmm.
right? But if the table is going to go up quite a way. But if the table is way down here,
Mm-hmm.
how far is that? If it's way down here, how far is this ball going to bounce up? It's not going to bounce up that far because it's got a longer way to go, right?
Mm-hmm.
So it comes here, boom, 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 bounce, running out of momentum, and it goes here. Does that make sense?
Okay, I think so, yeah.
So the deeper this retracement, the shallower the extension from this high.
Mm-hmm.
So I try to use the analogy of bouncing a ball off of here. If you're up here and you throw it
Mm-hmm.
and you bounce it here, it's going to go up higher. But if you throw it down further, it's not going to go as high. And if you throw it down even further, it's not going to go as high.
Mm-hmm.
Make sense?
Mm-hmm.
Okay, so that's that. So what we're trying to determine is where are we going to extend to. So once this retracement has happened, where is it extending to? Does that make sense? Is that you understanding the
Yeah, yeah,
question?
yeah. I
Yeah,
understand.
the what I'm saying, right? So this is why we use Fibonacci. So if I take this from the low to the high,
Mm-hmm.
right? Now I have this part is the retracement,
Mm-hmm.
right? So this is the pullback retracement of this initial upswing, the
Mm-hmm.
AB swing,
Okay.
right? And you see all these levels here, right? See all
Yes.
these levels? And they're marked 236, 382, 50, 618, 786, 860. These levels are a mathematical percentage level of this A to B or this low to high. Does that make sense?
Mm-hmm.
For
Mathematical
example,
percentage levels. Yes.
yeah. So, for example, this level here is 0.23, is 23% of this A to B. This level here is 38% of this A to B. This, whoops a daisy. Yes, I said whoops a daisy. This is 50%. This is 62%. This is 78.5%. This is 86%. And this is zero, etc., etc. You get it, right?
But this percentage means there is a 62% or 78% chance of retracing to that level, or what
No,
is oh
this
just
is the retracement.
retracement. I see, just like the initial uptrend is 100%, and
Yes.
this I see.
Yeah. So this is the initial move. This is
Mhm.
from the low to the high. So these retracement lines are marking the percentage that the market has moved down against this initial move.
Okay.
Right? Make sense?
Yes.
Yes. Okay. So you see all these red lines. These red lines from the B to this red line, this red line, this red line, and this red line, right, are all in red. They're different levels, but what it's telling you is this. It's telling you that if you're anywhere in these red zones and you don't hit the blue, your extension from this level will be to this red line right here. Now, it could go further, and sometimes it does go further, but it's just a mathematical equation. It's going to go to the 1.618. I don't want to get too deep into the mathematics and the golden ratio and all this stuff, but there's a lot of other sort of mathematical stuff that if you, the square root of this equals 1.61, if you add this to this, it equals 1.61. So if you know, just trust me, it works. Just have faith, like
Okay.
this, that the sun comes up, and this is why we have to keep doing this so we have belief, and you'll see. Yeah, you know what? It works 60% of the time. Now think about this. You say, well, 60% of the time. So does that mean 40% it doesn't work? I said, well, let's just say that math. Let's just use the math that this swing, this Fibonacci level works 60% of the time.
Mm-hmm.
That means you do 10 trades, you win 6, you lose 4. Are you happy with that?
Yes.
Yeah.
Okay, I see.
That's my point, right?
Mm-hmm.
Now, I want to show something. I'm going to go to the 1 hour, right? And I'm going to clear the board here, and I am going to do something. And I'm going to do my smart fib, And I want to show you something. This Fibonacci worked out, right? Look at this. This worked. See that?
Mm-hmm.
So
A to
low
B.
to high, retracement, tick along, tickety boo, tickety boo, tickety boo, finally hit right here. Went a little further, right? Boom. It hit it. So what does it do? It creates another one from the low, the first low, which we call the C.
Mm-hmm.
This is A, B, C,
Mm-hmm.
right? So from this low, right, it creates an A again.
Mm-hmm.
And the B is created by this D extension that hit the D,
Mm-hmm.
A, B, C, D. Once it's created a valid high, which has two candles to the right, two candles to the left, this is now the new B. Now it retraced, didn't hit the 382, right? Came back and it's going up. Where's it going? Well, it's definitely going to here as we looked on the 4 hour, right? That's the target. Why is that the target? Because in my years of trading Fibonacci and my years of studying Fibonacci, this market has a tendency to hit this. And if it hasn't hit the 302, we'll come back and hit the 302. Now, doesn't do it all the time. It does not. But what it does can come back and hit the B and stall there and go back up. So you could be trading from here down to the B. That's a good trade. Nothing wrong with that trade,
Mm-hmm.
right? What if it breaks the B? Well, it could just come and trade to the 236. That's not a bad
Um,
trade either.
but when are we gonna start to see the C? We have A, we have B. When, or it can happen that we are never gonna see the C. In this case, that this is the C because I don't know.
Here's the C.
That's the C, but why
Right.
the Fibonacci here doesn't mark it?
Because the A and the B will never change, but the C can change, which means this market can turn around and do a lower C. So it doesn't mark it because then we have to adjust the C. So because we always have to adjust it, it will not mark it. Because there's a possibility that this market can go to here, come back and hit the 382,
Mm-hmm.
which now this was the C. Now this becomes the C. And it could go lower than the 382. Then the lower one comes in. It's always the low from the A to B, right, is the C. But
Mm-hmm.
it can always move. It'll always be movable unless it hits the D extension or it takes out the A. So I want you to understand this, and I want everybody to understand this. We can go a lot deeper. We certainly can, but I want to understand one thing. And I want you to see this, and I'm going to mark them off. And hopefully you'll understand,
Hopefully.
yeah, what I'm doing here. I think you'll get it. Okay. Now I'm going to get rid of the Fibonacci.
So
All right.
you define levels,
Boundaries.
boundaries.
Yeah. So the blue,
Mm-hmm.
right? Forget the black to the black for now,
Okay.
right? I'm going to leave it there, but I'm going to make it faint. Okay? All
Mm-hmm.
right? Actually, no, I'm going to get rid of it for the time being, and I'll explain why. So before this broke here, right? Because we're going to do a low to a high, a retracement, and then we wait for the market to break up to extend from that high to make a higher high, which it did right here, right?
Mm-hmm.
Right. But while we're waiting for that, excuse me, sorry, while we're waiting for that, we have to understand something. Between this low here and this high, which is called the AB boundary, because
Mm-hmm.
this is an A, this is a B, right? The trading happens between this boundary. this range. It's a
Mm-hmm.
range.
Yes.
So there's more trading going on here. So you don't necessarily have to wait here on a higher time frame. You could be trading between this A and B for a long time,
Mm-hmm.
right? Now, simply with trend lines, you could say, well, I've got a I got a high created here. I'm going to trade it. I'm going to trade it down to the 382, but I'm going to draw a trend line along the highs, and I'm going to make sure as long as it doesn't break that trend line, I'm going to keep selling it.
Yeah.
See? And look, right? It didn't close above the trend line, didn't break it, did this one, did this one. Now, finally, it went back up and broke. So, this is where you get out, right?
Mm-hmm.
But can you buy it? Yes, because where is the direction overall? The overall direction is up
Mm-hmm.
because you're going low to high retracement extension. So you can wait for this is broken and then you can buy it. Now, this came back, it did, but it kept going, came back again, it kept going, finally went.
Mm-hmm.
Does that make sense?
Yeah, makes sense.
Then it created another boundary. Now, that boundary is from its previous lower low, which is here, which is the C. This is a very quick lesson, guys. You know that, right? So this is the C, now becomes the A. So now the boundary is now from here to here. See how large the boundary can get now? So there could be a lot of trading between these two black lines, right? Because that's quite an area. You understand?
Yeah, yeah, yeah. I understand.
Yeah. So there could be a lot of trading going on, right? Look, the Fibonacci is great. You use this with trend lines, you use this with levels. It's really, really good. But the Fibonacci for me is probably, I have a lot of clients. I've taught a lot of young guys, gals, and I ask them, or I always ask them, if everything I teach you, what was the one thing that wowed you?
Mm-hmm. What is it?
And they always say Fibonacci.
I was gonna ask you, what's the most strategy, the strategy that you think is most useful?
Fibonacci.
Fibonacci?
Yeah, you use Fibonacci to plot the waves of the market. The market moves in waves, and we use Fibonacci along with trend line. There's not just one thing.
No,
So
just one.
you can
Uh-huh.
see right here. You could turn and say, "Well, I trade swings."
Uh-huh.
So the swing is the king. I've told you that many times.
Yeah.
Swing is the king. I trade swings, but I use Fibonacci to plot the swing. But I
Mm.
also use trend lines to protect me and to get into trades.
Mm-hmm.
And I also use levels, right? So it's like, it's not one thing. But am I a Fibonacci trader? Yes, I am.
Mm-hmm.
I trade Fibonacci. So when we looked at the Meta and S&P
Mm-hmm.
and all that stuff, I was looking for levels to be hit. Then I went to a lower time frame and I was looking for Fibonacci sequences to be hit. You
Mm-hmm.
remember?
Mm-hmm. Yeah.
Right. So it's I prepare and I plan. I make a plan. I go, okay, I want that level to be hit. I want a valid high to be created. I don't want to trade yet because I haven't hit that D extension. I want to wait till I hit the D extension. Like things like this. So, here's an example. So we know that there is a level for me that I want to hit, right? This level here I want to hit.
Mm-hmm.
This is where I'm going. When I get there, I'm looking to sell, right?
Mm-hmm.
Would you agree? Yes?
Yeah, yeah.
All right. So what if this happens? What if this trend line breaks? Am I selling?
I don't know. Are you? I don't know. I
Well,
wouldn't.
I,
I'm
I
not sure.
no, because it has high probability to go up to here now because it's above the B.
Yes.
Right. But what if it breaks? So if it breaks here, I'm expecting it to bounce off the B.
Uh-huh.
and then go up to here. But what if
Okay.
it breaks the B and closes below the B?
I don't know.
Well, this is resistance. B
Yes.
is resistance,
That
right? So if
means.
it breaks,
Uh-huh.
you tell me, if it breaks and closes below the
Mm,
resistance,
Then I don't think there's a chance to go up to that blue line.
right? Because actually, I should say when it breaks the B, which is now support, it
Yeah.
becomes resistance.
Yes, yes.
So you want it to test the resistance,
Mm-hmm.
and then you can sell it down to the 382.
Mm-hmm.
Only when it does it. Look,
Why the
we have
382
to
and not the other support?
236, 236.
I don't know which one, but the first, yeah, that one, that one.
Yeah. Well, you can say, well, I want to be safe, so I want to trade it to here,
Yeah,
right? Because there's a lot of stuff here, right?
yeah.
So you can trade it there and say, I want to be safe. But again, you can do the same thing I did with a trend line. You can say, well, I want to trade it and I'm going to draw a trend line along the highs,
Mm-hmm.
right? And as long as it stays underneath this, I'm going to keep going until I hit the 382. And you can leave it and keep going until it breaks the trend line and say, okay, I'm out. Does that make sense?
Yeah, makes sense.
Yeah. So look at this. Look at this example right here, right? So here, right? This was the example I used to say, like, you could have traded this because this would have broken this trend line, and I would have traded it down to the 382, but it didn't happen. It finally broke the trend line, broke above the 236. So it's like, look, this was sideways. So you could say, well, I'm going to wait because it could hold, and then finally it broke above. And it's
Mm-hmm.
like, no, I'm now buying because I'm above the 236. Okay, what I'm trying to say is this. There are rules, specific rules on how to trade with the Fibonacci, with the levels, with the trend lines. It's the whole methodology of how to take advantage of the market. And that methodology I use highs and lows. The most important thing you can learn in trading is highs and lows.
Highs and lows and Fibonacci.
Okay? I want to ask you this question.
Yeah.
What is support? How is support created? Where is support created?
Support is created uh, when the market bounce of like a, I don't know, like a floor.
Okay, now you're getting a floor of support, right?
Yes.
So where is the floor? What would it be?
Uh, it would be, I don't know, price action where the market doesn't go lower.
Okay. All right. So you said the right word. It doesn't go lower.
Uh-huh.
So support is created on a.
On a low.
Now we get there.
Uh-huh.
Okay. This right here, this green candle right here, is support.
Yeah, okay. Yes.
But now this has become a support level because there's a lot of them there. Make sense?
Yes.
Right. So that's strong, right? So this market could come there and stop because we got a number of lows right here that maybe it won't go,
Mm-hmm.
right? So that's good. So if support is created on lows, what is resistance created on?
On highs.
All right. So let's make a little note here. So support lows,
Mm-hmm.
resistance highs. Yeah.
Yes.
Okay. How do I draw trend lines?
How do you draw trend lines?
Yeah. Where
Uptrend
do I start? Where do I
uh,
start?
from a low to a high.
How do I draw a downtrend trend line?
Uh, from the high to the low.
How do I draw an up Fibonacci sequence? Actually, hold on. Before I say that, how do I draw an upswing?
How do you draw an upswing? Uh, from the low to a high? I don't know. Yeah.
How do I draw a downswing?
The high to a low.
How do I draw an up Fibonacci sequence?
From a low to a high.
How do I draw a down Fib sequence?
High to a low. Okay, I think I understand.
Do you understand? What do you understand?
It's we have to understand the highs and the lows. That is.
Because everything, everything starts with a high and a low.
Mm-hmm.
Now, I've talked a lot about first principles,
Mm-hmm.
right? And we've talked, what is the first principle of trading?
Buying and selling.
Good. So, what is the first principle of buying?
Buying low,
What is the first principle of selling?
selling high.
There you go. That's why everything starts with a highlight. You have to master understanding what highs and lows mean in the market.
Mm-hmm.
That means when you see a high, you have to understand and say, what is that high doing?
Mm-hmm.
What is that low doing? Where did that high come from? Where did that low come from? Because sometimes you get a random high somewhere, you go, well, where did that high come from? You have to go left. You have to go back. You have to say, remember this guy, Jason? I can't remember his last name. He used to have a great saying. I used to love it. He would say, look left, market leaves clues. Loved it.
Mm-hmm.
And there's a lot of people out there that say, don't look left, look forward. No, look left because why? Because the market has history.
Mm-hmm.
And it comes to those levels and zones and places where it always comes back to, where it's comfortable, right?
Mm-hmm.
So, I've been doing this 16 years,
Mm-hmm.
and I've been doing it a lot. And I still make mistakes. I still lose. Get that into your head, everybody. Everybody loses.
Mm-hmm.
We all lose. But I don't lose a lot because I have great risk against my reward. And
Mm-hmm.
I'm wrong. Like, you know, we joke around and say, oh, what about this? Or you might be wrong. I said, yeah, I don't care. So I'm wrong. I think people don't understand that you can be wrong. It's okay. But what you have to do, I do two things. I look at it and I go, okay, to me it's going this way. But then I have a whatever, what if?
Mm-hmm.
What if this happens? So I'm able to pivot.
Mm-hmm.
I'm able to say, well, I had a bias to the downside, but now I'm changing, I'm going to the upside. Why? Because of this.
Yeah.
Does that make sense? And that's what we have to do. We have to understand that the market will do whatever the fuck it wants. Doesn't matter what I say, doesn't matter what anybody says, it will do whatever it wants.
Mm-hmm.
So you have to be able to adjust, you have to be able to go with it, and you have to be able to see that it's not going your way, either get out or change. And you have to be able to adapt to that market. And that's the most important thing, to be adaptable. You can create the bias. We create the bias using macroeconomics and the data for the fundamentals.
Mm-hmm.
We create a bias. And then we look at the charts and we create a technical market structure and sentiment, and we go, this is what I'm going to do.
Mm-hmm.
And we have that plan, and then we execute it. And sometimes it goes like absolute gangbusters. The amount of time you've come at me with your mouth is, I can't believe that. That's amazing.
Mm-hmm.
We look at the levels. You look at the 50%. You look at the high lows, close opens. You like, holy shit, that's incredible. 9 times out of 10, a high, guys, or a low, is from an old close and open on a higher time frame. Check it out. Don't take my word for it. Right? You'll see. You'll see this. I said, "What? Oh, fuck! Look at that! It was a close and open on a weekly."
Mm-hmm.
We've done that many a times. I said, "Oh, look at that! That's there because of this." And it's like, shit. The market is not that difficult. You know who makes it difficult?
The people.
Yeah. Because we are human.
Mm-hmm.
And we have this human trait of wanting to be right and want results fast. Instant gratification. We want it now. And we get pissed off when something doesn't work out the way we believe it should. And we get frustrated. We don't have patience. We don't have discipline. All these psychological barriers. I always say this to any of my clients, any people that come and join us and everything like that. I gotta say, because most of them say, well, what's the hardest thing? I said, you want to know what the hardest thing is, the biggest challenge you're going to have in trading?
What is it?
Yourself.
Yeah.
It's going to be you. And that is not anything fancy schmancy. It's true.
Mm-hmm.
Because in between your ears, you don't have, like, when people say, well, I'm nervous, I don't, well, then put things in place that can help you. Like, that's why I like using trend lines. Trend lines work. I don't care what anyone says. People say, a line on a chart doesn't fucking work. I can show you when it works. I can show you that it does work. The 50% retracement on a candle, you know how many times that I have shown that 50% on a chart, random chart, and I show them. And out of 200, 300 candles, there's like 280 that have retraced 50%. And do you know what those most traders focus on? They focus on the 10 that didn't retrace. That's what they focus on. They go, well, didn't work 100%. Nothing is 100%, guys. Get that in your head. Nothing is 100%. That's what you got to. That's why you have to have the right risk to reward.
Mm-hmm.
Because when you see everything and everything's in place and everything fits into your plan and you execute it and it's going your way and you protect it and then suddenly it doesn't, some news has come out, something's come out and it's not doing what you wanted to do, you get out, you either have a small loss, a small win, right? Or you break even.
Mm-hmm.
I would rather take those than letting it go and then crying. I have a saying. Here's another one of my famous, it's not mine, I got it from someone else, right?
Okay, what is it?
I would rather be out of the market wishing I was in than in the market trying to find a way out. I'll repeat it.
Okay.
I would rather be out of the market
Mm-hmm.
than wishing I could get in than in the market trying to find a way out.
Mm-hmm.
Do you understand that statement?
Yeah, I understand.
Yeah. So I mean, yeah. So
Yeah.
that is a good one. That is a really real good one.
Yeah.
And and of course, like I also have the patience. Guys have patience, right? I will take the frustration of patience to avoid the pain of regret.
Mm-hmm.
Because when you're in a trade and it's going against you, you regret it. You regret not following your rules. Because 9 times out of 10, when I sit with a client that's lost badly and made a bad trade, is because they fucked up the rules. They haven't followed the rules. 9 times out of 10, when I lose a bad trade, and I've shown you and I said to you, I said, I didn't follow the rules. I
Yeah.
fucked up. And I do it. Sometimes I do it. Right? So, anyway, is there, I mean, we're 10:26. Is there anything else you want to quickly look at or not?
Um, no, I think we can leave it for the next one. Yeah, I think
Sure you don't want to look at the S&P?
you want to look at the S&P. I don't know. It's I'm scared.
Why? Why are you
Uh,
scared?
I don't know.
Tell me.
It
It's a
it made
chart.
it's what?
It's a chart.
It's a chart, but yeah, it's crazy.
Don't worry about it.
Like a couple of weeks ago, it was like everyone was panicking and saying, "Oh, recession, recession," and then still people say there's high chances of recession. I don't know what's going on.
Well, what did I say to you the other day?
You said the S&P is not recovering. It's not making a new all-time high, at least in this year.
I don't think so. And like I said, I could be wrong. But, it. Would you say that this was a big drop
Yes, it was
without a retracement? When we get a big drop, what do we tend to have?
a retracement. Yes,
A bigger recovery, right?
yeah,
Did we have a big recovery?
yes,
We talked about these levels right here, right? Look, and look where it went,
yeah,
right? So it's like, look right there, look right here.
yeah, yeah.
This is where the trade started. This is where the anomaly started. It tends to go back to the anomaly. So now what? Now what? Well, let me show you this, right? Is this a swing? Is this a swing? Right? If this is a swing, what do you think is going to happen? Right?
Um,
There we go. This swing broke.
mhm,
Look, 1, 2, 3, 4, 1, 2. It hit the D extension. This new one is now broken, and we have to be careful. So the rules are this: we need to close underneath there first before we even think of that on this weekly chart. We're going down, but that's just the rules of the Fibonacci. So let's go a little further. Let's go to the daily, because we've hit. You would agree we've hit resistance here, right?
yes, we hit resistance.
Yeah.
Yeah.
So we have a possibility of coming down, right?
Mm-hmm.
So we could come down more. So what if this is this? What if we're creating an up swing? There's the high, and now we're retracing before we go back up. So if we're retracing, right, what do we need to wait here? If this is a swing, we need to wait for 2 candles to the right, right? So we've got the high here. Now we need 2 more candles lower than this high if this is going to be a swing.
Mm-hmm.
Make sense, right?
Yes.
So
So.
this could come here. This could come lower. It could be sideways. Here is a level of support. It just could be coming in between this. We don't know,
Mm-hmm.
right? You just have to wait. Could it come up and close above here? Yes. Would I trade it up to there? No. I'm only waiting for the market to make a new high, right? And what will I do if it makes a new high? I'll sell it
Mm-hmm.
because I still think this is overbought
Mm-hmm.
and it needs a further retracement.
Mm-hmm.
So that's the weekly. So let's look at the daily. This gets a little bit more confusing for people now because there's more candles here. And look at this level. Look at it. Beautiful. And we got from this high, we got 1, 2, 3, 4. This could be making a swing here to test this and then come back down. But let's look at the Fibonacci to confuse you even more. See? But again, this is broken. So this is a downswing, right? But look, the fib broke. If the fib breaks, right, technically it broke to the upside, right? And look where it's holding this level. So let's draw the up Fibonacci, yes? There it hit the D extension right here. If you remember, I said it's retracing because it hit a D extension. Here it is right here. And it hit it. It's coming back. Where's it coming back to? Here it is, look, 236. Wow, right? 236, remember?
Yeah.
Where's it likely to go? Up. If it breaks this B here,
Mm-hmm.
I'm probably wrong and it's going to this 127 right here.
Mm-hmm.
But what if it keeps coming down? What if it holds and then comes down and then hits here? Well, could still go up. Right now, we're in an up Fibonacci sequence.
Mm-hmm.
The only way we know it's coming down is if it breaks this A.
Mm-hmm.
Or creates 1, 2, 3, 4. This creates a swing.
Mm-hmm.
So we're going to go for a downswing here. 2 candles to the right, and then it starts going back down again.
Mm-hmm.
And maybe it does this swing and then creates another swing and it goes down and creates another swing and goes down. I know it's difficult. I know it's hard. I know. It's not easy. But you just have to follow the rules.
Mm-hmm.
And the rules being is that if I'm this high right here, right, this high was a very big resistance. It is now support. We need it to close underneath and test it for it to be resistance again. Does that make sense?
Yeah.
So this is the key level for me because I got this here too. Right? So got this here, right? This here, this closed above that level there. I got this candle right here. I got other levels right here that closed above it. So I'm going to do this just to make it clear for you guys.
Yep.
Make sense?
Yeah, yeah.
So I want to be under here or above here.
Mm-hmm.
There we go. Make it simple. Keep it simple. Now, I'm also going to add the trend line because we need the trend line too. And look where the trend line is,
Mm-hmm.
right? So we can draw another one because we got another one here. Look, it broke. See how it broke?
Mm-hmm.
So we've broken the trend line and closed but underneath it, right? Now we've got to worry about this level here. If this could go above there, it could go to the backside. We want to see if it breaks below and breaks this trend line. If it breaks this blue box and this, we're going down. There you go, guys. If it takes out this, has to take out this high for me to go any, if I'm going up, has to take out that high. Right there. It has to take out that high and test it before I would buy.
Mm-hmm. All right.
Does that make sense?
Yeah, it makes sense. But it makes sense. But yeah, it seems like right now it's like in the limbo, in the middle of deciding where to go.
Yeah, kind of. But I wouldn't be surprised if it does come to here.
Mm-hmm.
I mean, that makes me wrong with saying that it won't make a new high, but
Mm-hmm.
that's okay. But how long would it take to get here? Could take 6 months. We don't know. It could just chop down here, chop down here, or there, chop up there. I mean, look at this level right here.
Yeah.
Boom. There's another level right there. What if the market is just chopping between these two levels and we've got this centerpiece right here?
Mm-hmm.
So this is the 50% mean, right? Right here,
Mm-hmm.
right? So the market could just be going back and forth between these two.
Mm-hmm.
So from this B to this 382.
Mm-hmm.
We don't know. But
We
we'll
don't
see.
know.
Anyway, hopefully that helps.
All right.
All right. Well, thank you, guys. Thanks for joining us. Hopefully, you learned something.
Yeah, thanks for
If you
the
did, that's
Fibonacci
great.
masterclass.
Well, it wasn't really a masterclass. I mean, I think that's something we should, if people want to really learn it, we should maybe kind of offer that. Say, come and watch it.
For
I
sure.
think that's something we want to do. Definitely, we want to do it in the future. We've been talking about it, but anyway, we will see.
All
All right,
right.
guys. Thanks very much. Have a good week and trade safe. And we'll talk to you next week. Take
Thank you,
care.
Ashley.
Bye.